Ravi Dharamshi is now joining us, Chief Investment Officer at ValueQuest Investment Advisors. Ravi, good morning. Good to have you with us here. Thanks very much. You know, the overwhelming narrative locally has been the slowdown that we've been in, but markets try to look ahead. And when you do that, there is a small minority which, I mean, the view is only emerging that maybe, you know, when we talk about a slowdown, it's we're looking back. You got to look ahead. And that is already sort of self-correcting in some cases, but maybe with some help from the government and maybe the RBI tomorrow. Do you believe that, Ravi, that it is starting to turn already after a quarter, 2 quarters of slowdown? What's your sense?
Thanks. Good morning, Prashant. No, I agree with that viewpoint that, this, I won't even call it a cyclical slowdown. I think it was more a seasonal slowdown led by factors like election, which kind of halted the capex machinery. The problem with the Indian economy was that it was firing in only one engine, which is the central government capex. And the moment that kind of took a pause, that kind of led to a dramatic slowdown in the previous quarter. However, now that is correcting itself. The spending is back with a bang. Even the budget, even though the headline number seems smaller, but it is continuing 3.2% of the capex to GDP ratio. So the capex levels are being maintained. I won't say that is an issue. So one more thing that budget has done is it has added probably one more engine of growth, which is consumption, which has not been doing well since a while. So now capex maintaining its pace. And see, even within the capex, the bigger pieces are private capex and household capex. Now those two pieces need to fire rather than the central government bearing the entire load. So I believe that with some help from RBI and some help from government, we should be able to get out of this seasonal slowdown that we have been witnessing.
Ravi, so hi, great to have you on the show. I think the consensus now, a couple of days after the event, is that capex maybe is not entirely going away. And yet there is this bit of a consumption boost. And that's what you point out as well, right? That this is this troika of real estate, private capex and the consumption cycle that is really important to take this market higher. What part of this troika are you most optimistic on? If you were to put fresh money to work, would it go towards capex stocks, consumer? I mean, and give us some sub-segments as well, because they're very large segments, right? So what in capex or what in consumption would you back?
So I think 2-3 things we've been trying to anticipate in the market. One is that this passing of the mantle within the capex cycle from central government towards private sector capex. This was regardless of the budget. I mean, we were looking forward to it. Second thing we were anticipating is the broad basing of the real estate cycle. I think real estate cycle has been kind of very skewed towards the premium end of the economy, and we need to see broad basing of that. This budget and the previous budget, I think the government has done enough to reignite the real estate cycle. They have kept enough elbow room for the RBI to cut rates or at least bring the interest rates down. So from that perspective, I think real estate should see a boost going forward. So those two are the bigger engines of growth. So we continue to remain bullish on certain segments of capex, and incrementally now we are looking to consumption-oriented stories also are beginning to get featured in our portfolio. It has been missing since a while in our portfolio. We have not bet on consumption since probably last 4-5 years. But now I think that is going to change incrementally. And we are more betting at this point of time on smaller ticket items, not necessarily staples, but consumer discretionary. So without naming any company, but apparel companies, retail companies, footwear companies, quick service restaurant, these are the categories and segments that we would be keen on looking at to see where the pickup is showing up first.
Okay, all right. Hi, Ravi. Good to see you in. Ravi, the other big debate is on renewable energy. And you all were early in, on a couple of those stocks. But could you give us your comment on this? Because this government is focused on renewable energy, and there are various measures as well that are being taken in that direction. There is this debate about overcapacity, maybe in the globe, but in India, there'll be still a lot of demand for modules, for chips as well. So give us your comment on this. How do you think things are panning out? Is there a shortage of these modules, these cells as well? And do you think the theme still has legs from here?
So India is but one piece of the entire jigsaw puzzle. The larger question remains on the global markets. no doubt about it that China dominates the supply chain, and no doubt about it that there is a oversupply situation in China. China has invested ahead of the curve. It has been a geopolitical strategy that China has been running to crash the prices, and with their with the prices crashing, then it becomes unviable for most other countries to put up their capex. But strategically, it would be a mistake for countries like India and US to not do the capex and develop their own supply chain, because then they will remain dependent on China for probably forever. So from that perspective, the world will develop into a China catered market and a non-Chinese catered market. And in the non-Chinese catered market, India will have a large role to play, whether it is India and US, and maybe some other markets might also become part of that. But these markets will remain non-Chinese. They will put tariffs and non-tariff barriers to ensure that the other supply chain also develops. So again, Indian scenario looks very good from the next 2 years perspective, but the entire sentiment right now is being driven by what happens in US because of the kind of steps being taken by the new Trump administration, which has put pause on Inflation Reduction Act led funding. That is what is creating the uncertainty. And I strongly believe that it is only a pause, and soon enough it will turn around, and in some or the other form, Inflation Reduction Act, maybe it will become a Make America Great Again Act, and it will come back with new overhauls. But I don't think solar as a technology is going anywhere, and renewables, the move towards renewables is going to be paused even by the new Trump administration.
Okay, interesting. Thanks a lot for that, Ravi. A short but effective chat. Appreciate you joining in and giving us your comments on how you see the market shape up from here on. That said, let's get to a